All right, let's continue on here. So a few things I wanted to go over today. The first of which is, let's just see here. I just wanted to take note of our FX forecast here, right? Oh, not ours. This is CIBC's. Not certainly not trying to take ownership of this. Um, but I did want to take a look here to say, we are nearing the end of Q1 at 145, right? Then we see the dollar weakening again in the end of Q2 to 146, okay? And then, in into Q3, we see the Canadian dollar strengthening up to 143 and then winding up the year at about 142. And indeed, for the following year, you see some strengthening from 142 to 150. At least this is the pro forma which they've presented, or so this is their estimate, right? So here, guys, what I wanted to kind of take note of is that you can kind of indirectly see that, listen, this us cutting interest rates is hurting us. And, since last week's
Yeah.
meeting at the Finance Committee meeting in Washington, where Jerome Powell was testifying, you can see here that, he implied that there'll be a bit of a lag and a wait and see period probably up until September. And you can see that that is the point at which it starts to kind of um, strengthen up a bit, because the United States will now be cutting their currency and quote unquote giving Canada a little bit of time to, strengthen theirs, right? So these are spot rates, guys, the estimated spot rates. So you won't likely be getting these at the bank. You'll probably see these very, if these numbers do come to fruition, you might be seeing them on your Interactive Brokers app or wherever you get your spot data from. But again, you see that this is not supposed to strengthen up until maybe September, and then two, only by a few basis points. And we're seeing that this difference in rates between Canada and the United States, it indeed is expected to last like, you know, wow, almost like a year and a half, or a year and 3 months, sorry, a year and 9 months out, right? So consider that this interest rate differential is going to last quite a while, which does play an impact on Canadians that are transacting in the United States. It plays an impact even right as immediately as our trading accounts, where we are constantly, yes, we are selling options, agreed, but the Canadian equivalent margin requirement is going to be higher, right? Now, granted, when you receive your premium payment in US dollars, that you're going to have an uptick there. But again, it does show that currency, can definitely make a difference. Perhaps not immediately, like from 145 up to 146 down to 142, although that is a few percent down to 140, a little bit more impactful. But certainly this does play a part. Do keep an eye on this, because you want to know where your returns are coming from. And will there be a little bit of impact from currency if this were to come true? Yes, there'll be a little bit. Any questions here, guys, around this type of pro forma? And you can go through this, and if you're going to South Africa, or you're going to Australia from the United States, et cetera, you can kind of take a look.